Good morning. This is Horizon's Middle East and Africa, our top stories this morning. As the ceasefire between Israel and Hezbollah holds, an Egyptian security team is reportedly traveling to Israel for Gaza talks. The U.S. FTC launches a broad investigation into Microsoft, looking into everything from cloud computing to AI. Plus, the Mexican peso strengthens after President-elect Donald Trump says he had a productive conversation with Mexico's President Claudia Sheinbaum. Well, it's just gone 8 a.m. across the Emirates. I'm Joanna Bersachi in Dubai. If you're up late in the U.S., happy Thanksgiving. We know that it's a market holiday today, so there's going to be lighter trading than usual, perhaps slightly thinner volumes. But what we did see yesterday in the run-up to Thanksgiving was a bit of a dip for the U.S. majors, S&P and the Nasdaq ending up in the red. We had those PCE numbers come in line with expectations, but I would say leaning towards the stickier side of the inflation spectrum. We'll get to that in a moment. But then more broadly, we had some downward pressure on the tech sector, Nasdaq closing down in the red, the likes of Microsoft being pulled down lower after that FTC investigation. We will talk more about that on the show, in addition to some of the leading computer makers, the likes of Dell and HP, also leading declines on the tech index as well. But today, the futures leaning towards the green, S&P and Nasdaq tilting up about 0.1 and 0.2% respectively. The US dollar saw a bit of downward pressure yesterday, so bucking the recent trend of strength. Today, not doing a whole lot, as well as we speak about thin trading. And then Brent clearly in focus still as we get into the OPEC Plus decision this weekend. And from reporting, it seems as though they may yet once again postpone the decision to bring extra barrels back to the market, given some of the fundamental pressures that are existing in that market. As for our terminal chart today, I spoke about PCE at the top of this show. And just to point out here that, yes, the number did come in line with expectations. The month-to-month figure for core PCE rose 0.3%. But look at the last couple of months, and you'll see that the trend actually is moving in the wrong direction. So this is a Fed, obviously, who have been talking about price stability and bringing inflation back to 2%. This is their preferred inflation gauge. And yet, on a month-to-month basis, core PCE has continued to rise. On an annualized basis, we're looking at a number closer to 2.8% for core, 2.3% for headline. So still above 2%, something to bear in mind. All right, let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril, just give us a rundown.
Yeah, Joanna, we're seeing the gauge for stocks in the region pretty range-bound today. It's a mixed bag. As you can see, Chinese stocks are reversing from some of the gains a day ago that was fueled by expectation, speculation of fiscal stimulus amid the tariff risk. And today we're hearing from Bloomberg sources that the U.S. is considering fresh sanctions on sales to China on chips. And worth noting that some of these considerations are lighter than expected. So something that's what's fueling the climb in Japanese chip makers today. The likes of Tokyo Electron surging as much as 10%. That's the big boost to the Nikkei. Meantime, South Korea stock market looking pretty flat. The Korean won losing ground. And this is against the backdrop of the Bank of Korea surprising markets with a back-to-back rate cut. It's seen as a preemptive move, sort of in anticipation of the risks to the trade-reliant economy against the backdrop of the incoming Trump administration. Jumana.
Yep. Very interesting perspective there also on the Bank of Korea decision in light of what you say could be a more onerous trading environment once the Trump administration steps into power. Avril Hong in Singapore, thank you very much. Now, over in this part of the world, the ceasefire deal between Israel and Hezbollah is holding in Lebanon more than 24 hours after it took effect. The truce is seen as a first step towards peace initiatives in the Gaza Strip, where fighting between Israel and Hamas continues.
We discussed the truce agreement in Lebanon between Lebanon and Israel, and we express our hope that this agreement will result in a real ceasefire, and also that its shadow will extend to the Gaza Strip, and that this will lead to reaching an agreement in the Gaza Strip and ending this human suffering as soon as possible.
All right, let's bring in Bloomberg's Paul Wallace now. Paul, let us maybe just talk about the first day of this truce. It's supposed to be a 60-day truce with the view that it could at some point create lasting calm in the region, per the original statement. No infractions so far.
No major ones so far. There were a few incidents where warning shots were fired by Israeli forces and things like that. But broadly speaking, yes, it did hold. There's still some confusion in the south as Lebanese civilians seem unsure whether they can go back to their villages, and if so, which ones, and they can't. So all this stuff still needs to be worked out. IDF forces are still in southern Lebanon, and they've said they're only going to withdraw gradually. Basically, they're only going to be out at the end of the 60-day truce if everything goes smoothly. And I think the same seems to be the case with Hezbollah forces. They're only going to withdraw to the Litani River gradually. So far, yes, it's held, but it's clearly fragile.
Yeah, tenuous, shaky still. It was interesting to hear the Qatari PM comments there. We know Qatar have been acting as a key mediator on the Gaza ceasefire discussions. Does the truce in Lebanon open up a new page, a restart, so to speak, for the Gaza ceasefire discussions as well, do you think?
Well, it was interesting to hear the Qataris say that they hope the shadow of the Lebanon truce sort of casts itself over Gaza. There's clearly a lot of hope from the Americans, from the Qataris, from a lot of other nations that this truce in Lebanon gives impetus to the talks over Gaza, which have been stalled for months and months. I think it is. Although there is optimism on the American side, and Joe Biden really would like a deal before he leaves office, if nothing else, to sort of shore up his legacy a bit, there seems to be so far little to suggest that a deal can be done soon on Gaza. In some ways, it's more complicated than Lebanon because you've got the issue of the hostages. Israel really doesn't, well, at least Benjamin Netanyahu seems to really not want to move forces out of Gaza. I think all things being equal, he'd be fine not to have them in Lebanon, but Gaza is a different matter. There's not much appetite among the Israeli public for Israeli forces to leave Gaza as well, because they think they need to be there to prevent security threats to Israel. So there's a lot to still sort of get over and a lot of gaps to bridge before we can get a ceasefire in Gaza.
Paul, thank you very much for the update. That was Bloomberg's Paul Wallace here with me in Dubai. Bloomberg has learned that Microsoft is being investigated by the U.S. FTC. We're told the Federal Trade Commission is looking into everything from the company's cloud computing and software licensing businesses to cybersecurity offerings and AI products. So let's get more on our Bloomberg scoop with John Harney in Washington. John, it feels as though this investigation is pretty widespread. What more can you tell us about what they're looking into?
Well, it promises to be, as my colleagues Josh Cisco, Leah Nyland, and Dina Bass report, not only widespread, but quite deep and gets into a lot of complexity. This marks a finale of sorts for Lina Khan, the chair of the FTC, who has embarked over the last 4 years on a very vigorous and aggressive antitrust agenda, the strongest in recent Washington memory. What led to this seem to have led to this were factors including Microsoft's role as a major government contractor, and the CrowdStrike failure of earlier this year. CrowdStrike was on the Windows operating system, which is all over the world, and it affected everything from doctors' offices to airports. And so this vulnerability and the pervasiveness of the Windows system, I'm sure, weighed on the minds of the FTC.
Yeah. What's interesting is there are many who believe that Lina Khan's position as the commissioner of the FTC could be at risk and that there could be a change and turnover once the new Trump administration steps into office. What could potentially happen with these ongoing investigations, specifically this one, say, into Microsoft, once the Trump administration actually starts? Well,
the Trump administration can't just shut it off. Like a faucet, if you will, so they'll have to make some sort of decision. Now, what is interesting here is that, unlike other parts of the government, Lina Khan has some admirers among the people who are going to be in the new administration, including J.D. Vance. And the technology giants are regarded with great suspicion in some conservative circles. For instance, many of the platforms were accused of censoring conservative views. This is an accusation by Republican lawmakers and others, and the companies, of course, have denied this, but this is in the air, if you will.
Yeah. John, fascinating story, and also it had a clear impact on markets yesterday because we saw a sell-off in some of these leading tech stocks, with Microsoft in leading some of those declines. Bloomberg's John Harney in Washington, thank you so much for the update. Well, Bloomberg has also learned that Uber is under investigation by the U.S. Federal Trade Commission over whether it violated consumer protection laws with its subscription service. We understand the FTC is looking at the enrollment and cancellation aspects of the Uber One service, which provides discounts on rides and delivery orders. Uber says it's quick and easy to cancel the service. The Biden administration is said to be weighing additional curbs on chip sales to China, a crackdown that stops short of some of these stricter measures previously considered. After months of deliberations by U.S. officials, the restrictions are expected to target semiconductor equipment and AI memory chips. Still ahead, we'll discuss what Donald Trump's threat of higher tariffs means for investors with Aditum Investment Management. That is coming next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The Mexican peso advanced after President-elect Donald Trump held talks with Mexico's President Claudia Sheinbaum. Posting to his online platform, Truth Social, Trump said Sheinbaum had agreed to stop migration through Mexico and into the United States. Joining me to discuss this further is Bloomberg's Jill Deeses, who's in Hong Kong. Jill, it just seems reminiscent of this Trump carrot and stick approach. The stick being obviously the tweets that he put out just 2 days ago, threatening Mexico with extra tariffs. And then the carrot is the sweetener, the call with the president. What else do we know what was discussed on this phone call that they had?
Yes, that's right, Jumana. I mean, I don't know if it's just a knee-jerk reaction you're seeing there with the peso or what, but we really didn't get too much out of those Truth Social posts, really just that he says that he's had this wonderful conversation with the Mexican president. She actually had said earlier that they had discussed, the fentanyl, they had discussed, some of these issues, border security, that Trump is so concerned about. But the bigger picture here is still the fact that, we did have this tariff threat earlier this week from Donald Trump, 25% tariffs on goods, because he's so concerned about border security, because he's so concerned about fentanyl. And it is kind of interesting just because, these were major priorities for him in his first term. That was part of why he tore up NAFTA and started to renegotiate some of these things. So I think, yes, that carrot stick approach still seems to be well in play. And then we'll have to see how much of this actually follows through when it comes time, for his inauguration in January and what that actually means for, Mexican-U.S. relations going forward.
Yeah, I discovered quite a cool function on the terminal yesterday, ECTR, which tracks countries' biggest trading partners. And right at the top for the U.S. is Mexico. Mexico is actually the U.S.'s largest trading partner. And I just wonder from the Mexico perspective, how the threat of tariffs, the potential implementation of further tariffs is impacting sentiment there and the outlook for the economy.
Yes, and that is a fantastic function, for our listeners here. Just the ability to kind of visualize how a lot of that really comes together on the terminal is really fantastic. What we're actually looking at in terms of what these tariffs could have in terms of impact. Bloomberg Economics estimates. You're looking at something that could be up to risking some 11% in GDP growth for Mexico here. A lot of economists and analysts, various investment firms have really kind of said that these additional tariffs could create a lot of risks for growth, potentially slow investment. Mexico itself has actually said that there would be a risk to some 400,000 U.S. jobs as a result of these tariffs. So, I mean, there's a pretty significant economic impact that would have to be measured here. But at the same time, I mean, there's so many different pieces of this that are still in play, Jumana. You've got Mexico that said that they're considering some kind of retaliatory, tariff measure. It's not entirely clear what that would look like. And we'd still have to kind of see, if this is some kind of a blanket, impact on goods here. Mexico has also warned that there would be some pretty significant impacts for the automotive industry in the U.S. So, again, a lot of details, still a bit unclear about how this comes together, but we'll have to see what that looks like if he does enact day one tariffs as he's saying he would do.
Yeah, well, at least the leaders are talking, so at least the diplomatic channels are open. That's one of the positives, which is why I guess the Mexican peso is rebounding a little bit this morning. Bloomberg's Jill Dees joining us from Hong Kong. Thank you so much. Well, it may be too early to see the impacts of Donald Trump's tariffs and immigration policies on U.S. and global growth. But let's bring in Omer Chowdhry, the head of global fixed income and multi-asset strategies at Aditum Investment Management. Well, maybe let's just start with that, given we were talking about tariffs and the impact of tariffs. It's really difficult to ascertain what this next administration is going to do. One thing we know for sure is that tariffs are going to be a tool of negotiation. How do you navigate that as a player in this market?
It's difficult, and it's very early days to navigate it. It's hard to model out because a lot of balls in the air, a lot of uncertainty. What are the extent of tariffs? What are the level of tariffs? Is this going to turn into a tariff war or just a one-off by the United States? I think if it's the former, where you turn into a bit of a war, especially with China retaliating, that could be a problem for global growth, and maybe risk assets might have to adjust. That's a next year story, and still I think it's too early to tell how it's going to pan out. And one of the indicators that we look at is the reaction in risk assets. And if you look at U.S. stocks, they're pretty calm right now.
Yeah. So that's the thing, right? So it seems as though the market, given loads of question marks about what Trump's policy is actually going to look like in practice, has sort of settled on this expected value of everything might be okay. So stock markets continue to trend up. There's been sort of a stabilization of yields. Credit is still hanging in there. But I just wonder, in case things are not okay, in the very worst case scenario where heavy tariffs get applied, there's retaliation, there's a trade war, global trade nosedives. How do you hedge for that? Are you thinking of hedging for a worst case scenario in case that happens?
Yeah, look, I think treasuries will play a hedge again, because treasuries have been anything but a hedge lately.
Yeah.
Gold might play a bit of a safe haven again for that. And then, we're pretty kind of neutral to overweight on equities right now, but that we'll have to move to an underweight position. And I think equities will have to reset in that scenario.
Yeah.
But I think it'll be a flight to safety, a massive flight to safety trade, and yields would drop quite sharply in that scenario.
So let me ask you about what's been happening on the inflation front. Yesterday we had PCE. We know the Fed loved to look at the PCE. Headline 2.3%, still above 2%. Core even higher at 2.8%. Should we also reconcile with the fact that perhaps higher inflation levels are going to be with us for a long time now?
I've been saying that for a while, that we probably should, and we should look at more of an average inflation target rather than a specific target of 2%. I think the direction of travel is still good. It's towards the central bank target, but it's going to be a bumpy ride. The components of inflation and core that are elevated, the forward indicators are showing that they're going to cool, but it's going to take time. And until then, the market gets a bit jittery and anxious, but you have to kind of ride the wave and through the bumps.
Yeah, and I just wonder, the setup going into the December meeting, again, it's a coin toss whether they actually do go for an interest rate cut. But it would be rather bizarre for the Fed to have gone for 50 basis points in September and then do nothing in December. In retrospect, maybe did they go too quickly in September by going for that 50 basis point cut?
Possibly, but I think that, look, we had a target of about 75 basis points in the second half. We've gotten that. Now that Trump is in the White House, Republican sweep, and all this volatility around policy and tariffs is coming, to the surface, I think the Fed will have to monitor up until the meeting and see that if things get out of hand, they might take a step back. Tariffs, in theory, are inflationary. We're not sure if they really are, because the last time he put tariffs, the inflation effect was quite muted. But the Fed might want to reassess and revisit next year, so we're kind of also 50-50. They might actually skip this meeting.
Yeah. Why do you think that yields are actually rallying? So 10-year yields, we're down to around 4.25 now. We were very close to 4.5. In light of the inflation environment, in light of everything that we were just discussing, why has fixed income caught a bit?
I think that yields had a sharp rally, or rates rose pretty sharply from mid-September. They adjusted for a lot of the Trump premium, stronger economic data. And then it's a good risk to reward to kind of add duration to those portfolios. And then we got the news with the appointment of Scott Bessent. That was a good news for the Treasury market. We got a bit of geopolitical tension in Russia, Ukraine. That was a bit of a flight to safety. That's kind of priced out now. So I think that buyers are stepping in at 4.5. I think that's a good level, at least on a real yield basis. So your real return is pretty attractive at these levels.
Yeah. One of the, you mentioned that you're sort of turning a bit neutral on equities, right? Yeah. You just said that. So I thought it's interesting that you're increasingly getting these idiosyncratic stories pop up and increasing focus on regulation, antitrust investigations. Look at what's happening with Microsoft now. Is this a worry that you think will move down the ranks once the Trump administration comes in, because they might be less hands-on with regulation and sort of investigations into big tech companies than than this administration?
I don't think it'll necessarily have a negative effect. Trump is meeting with a lot of the CEOs from these tech companies as well. I think he wants to have a good business relationship with that sector, with the CEOs. I think it's early to tell what exactly is going to happen on that front. But so far, every time you get kind of like these antitrust issues, it's not really had a negative effect on the stock prices. And I think that generally markets are more focused, as they should be, on earnings. And in particular for those stocks, the AI story, which is still in the early innings, we feel. Earnings are, these guys said that they're still ramping up capex and buying a lot of NVIDIA chips, for example. And we think that that sector will still deliver a bulk of equity returns going forward, unless there's a big slowdown in demand.
Yeah. Okay. Good place to leave it. Thanks so much for coming on our show. That was Omer Chowdhry, head of global fixed income and multi-asset strategies at Aditum Investment Management. Well, coming up, Saudi Arabia's Minister of Economy and Planning says passing the 50% mark of total real GDP is yesterday's achievement, and that is in reference to the non-oil part of GDP. So I spoke exclusively with Faisal Alibrahim. We'll bring you that interview later this hour. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Now for a look at some of the other stories we're following today. The UAE's biggest oil producer is to form an investment company for international natural gas, chemicals, and low-carbon energy, three key businesses in the company's global expansion push. ADNOC says it will start the business to be called XRG in the first quarter of next year. It is expected the new firm will have an enterprise value of over $80 billion, with the aim of more than doubling the value of its assets over the next decade. Liv Golf is reportedly planning to hire former Philadelphia 76ers executive Scott O'Neill to replace outgoing CEO Greg Norman. Theme park operator Merlin says O'Neill is standing down as its chief executive. The Saudi-backed Golf League has been eyeing a new CEO for months and would likely offer O'Neill the role as commissioner as well. And a quick look at futures before we head to break, leaning towards the green. Still ahead, we're going to be talking about Delivery Hero boosting Talabat's IPO to as much as $2 billion. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. As the ceasefire between Israel and Hezbollah holds, we speak to the Lebanese economy minister in the next hour. Chinese stocks fall after a report the Biden administration is weighing additional curbs on sales of semiconductor equipment and AI memory chips to China. And the US FTC launches a broad investigation into Microsoft, looking into everything from cloud computing to AI. It's just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. Happy Thanksgiving to our U.S. viewers. So technically, it's still actually Wednesday for you, but happy Thanksgiving for tomorrow anyway. Markets, thinner liquidity than usual, lighter volumes, but there was a lot of attention yesterday on the PCE print, and that came in line with expectations, although I will say the last couple of prints have been inching higher on a month-to-month basis. So something to watch out for as we think about the direction of travel for these inflation figures and how it may impact Fed's decision-making from here. We saw a bit of a pullback for Wall Street yesterday. Tech stocks coming under pressure, the likes of HP and Dell leading declines there. Microsoft also, after that FTC investigation was launched. Today, futures looking more positive, leaning towards the green, up about 0.2% respectively. The dollar not doing a whole lot today, though we did see a bit of a pullback in yesterday's trade, down about 0.3%. 0.5% at one point today, trading sideways. And here, direct reaction to some of the comments vis-a-vis tariffs and the conversations that Trump is having with the Mexican president and what's going to be done there. So all of that is being factored in to the direction of travel for the USD. And then Brent maintaining these levels here at around $73 as we head into that big OPEC plus. It's a virtual meeting this weekend, and the reporting suggests that they may once more postpone the decision to bring extra barrels back to the market. So something to think about there. In terms of our terminal chart, though, I do just want to draw your attention to what's been happening in France. This is a big theme for my colleagues over in Europe, but they've been talking about the budget impasse. There's a lot of pressure on Barnier, the Prime Minister, to get his budget through. Clearly a lot of pressure on France to bring down the size of their deficits. But as you can see, fixed income investors are getting a little bit nervous. And if you look at French bond spreads, i.e. the spread difference between where France bonds are trading versus Germany, we're at the widest we have seen since the debt crisis. So going really a long way back, all the way back to 2012. So this is a big emerging story in Europe and something we're keeping an eye on as well. All right, let's also check in on how equity markets in Asia are faring. Avril Hong is in our Singapore studio. Avril.
Yeah, Jumana, we're seeing Asia's gauge of stocks looking pretty flat because it's mixed. China going higher, Japan, or rather I should say Japan going higher and China is going the other direction. Korean assets are in focus because the Bank of Korea today surprised with a back-to-back rate cut. Of course, economists weren't expecting this because of what this might mean for financial stability, but it is seen as a preemptive move as policymakers brace for potentially the hit to growth under a Trump administration. Remember, South Korea is a really trade-reliant economy and it exports about a fifth of its products to China. It also has a trade surplus with the US. So looking ahead, it was also really interesting to see the Bank of Korea telling us that half of its board members are actually open to another cut in the next 3 months, which means we could see one in January. And for context, this chart, courtesy of David Englert, shows you if we see a third cut in a row, this would be the first time this happened since the global financial crisis. So just to give you a sense of what central banks in Asia are kind of bracing for ahead of the Trump administration. Jumana.
Well, to quote our esteemed friend David Inglis, things may not be okay. Get it? Avril Hong in Singapore, thank you very much for that overview. All right, Saudi Arabia's Economy and Planning Minister expects non-oil activities to increasingly contribute to the kingdom's growth after passing the 50% mark of total real GDP. Faisal Alibrahim told me exclusively that the milestone represents a structural shift in the economy.
This budget is a roadmap for long-term economic leadership. We can't transform in one budget cycle or two. This is a long-term journey that requires consistent work. In the past, when we started, we were trying to get our finances and financial management in order, so we focused on zero deficit. After that, we realized that a deficit by design in a stable region between 2 and 3% is good for investing in the right economic sectors that we want to bring forward. This is about quality, non-oil economic growth.
Well, I noticed that spending in 2024 actually came in 7.5% higher than what you had originally anticipated. What guardrails are in place to ensure that spending doesn't overshoot once again in 2025?
We're very conservative in our estimates for revenues, so that helps us. We are also year after year testing with more fiscal rules to help keep our spending within specific ranges. However, there's always opportunities for us to advance progress that we're seeing in non-oil sectors or priority sectors that are seeing more growth than planned. And decisions were made in the past, not just this year, but before, to double down on some of these sectors to improve and amplify the impact, but also to build the foundation for a more sustainable, more vibrant, more diversified economic growth story moving forward.
And on that point about diversification, I thought it was noteworthy that His Excellency, the Finance Minister, Mr. Jadaan, pointed out that 52% of the economy now comes from non-oil sources. To what extent do you think that provides the Saudi Arabian economy with a buffer to what's going on with oil prices? Because there has been quite a lot of downward pressure on the price of oil.
So that's the objective of Vision 2030, minimizing the impact of one commodity price on our ability to grow the economy. Traditionally, our government spend relied on oil revenues. Our economy relied on government spend. Both of these relationships today are relying less on each other. So today, for the first time, we passed in 2023 the 50% mark for non-oil activities as a percentage of total real GDP. Today, that reached 52. We expect this to go higher and higher. It started at 47 before the vision. Even if it's a few percentage points, these represent a structural shift that takes decades sometimes to achieve. So while we're excited about this achievement, we don't see it as a milestone that we'll over-celebrate. It's a baseline. It's today's baseline, yesterday's achievement. We want to focus on how the growth can be of higher quality, representing more private sector dynamism, more opportunities for highly valued jobs for people in Saudi Arabia, and more non-oil exports.
That was the Saudi Economy and Planning Minister, His Excellency Faisal Alibrahim. Now, my next guest says he's scaling back hopes for recovery next year across Central and Eastern Europe, the Middle East and Africa against a backdrop of heightened geopolitical risk and global growth doubts. He says fiscal fears will displace price pressures as the key policy constraint. To talk more about this is Simon Williams, Chief Economist for CEEMEA at HSBC, who joins us right now. So that's the broad picture for next year. I actually just want to pick up on the interview that I had with His Excellency from Saudi Arabia. They were sort of touting the achievement of the fact that more than 50% of the economy now is being derived from non-oil segments. 52% is the exact number, and saying that this is a demonstration that their diversification push is actually manifesting on the ground and having a real impact. To what extent do you think this is actually going to provide somewhat of a buffer to Saudi Arabia against the backdrop of ever lower oil prices?
I think they're in the midst of a really strong part of their economic diversification story. Look at the drivers of overall GDP growth in the last 5 years. It's all come from the non-oil sector. We've got non-oil GDP growth running at 4.5% over the course of the next 12 months, which on a global basis is a really strong number to be delivering. I look at Saudi growth against its historical trend, and I can see the Saudi economy growing significantly quickly than was previously the case. And I think it's partly about cyclical factors, but some of those structural changes, the big shifts in how the economy operates, I think that's lifting potential growth already. It's one of the reasons we're still pretty constructive on how Saudi fares over the next 12 months.
Yeah, fair enough. And you are seeing that optimism expressed by certainly people in the region. But there is a perception that should oil prices continue to drop, if we get to $60, as some are saying, if OPEC actually do end up releasing extra production barrels to the market, what does that do to the region as a whole? Which are the countries that would be most exposed?
So we spent the previous 2 years or so talking about oil prices trading a $70 to $90 a barrel range, 80 as a midpoint a few months ago. We changed that number down to 60 to 80, so 70 as the midpoint for that range, and 70 is the basis for our forecast. Right now, pretty much where we are now. We're pretty comfortable with that assumption. But to me, 70 is probably the end of the comfort zone. For the regional price that falls below that level and stays below that level does begin to expose some of those structural rigidities that always constrain the way the economy fares. Oil price below that starts to weigh on sentiment, starts to weigh on liquidity, begins to feed through into some of the fiscal choices, and that does start to weigh on growth. But for now, oil at 70, I think, is likely to hold.
Yeah, okay, interesting. But when you think about these countries' public finances, even Saudi Arabia have started taking to bond markets and borrowing a whole lot more. Fine, debt to GDP ratios is still pretty low. Do you think that there will come a time where countries, nations in GCC will have no choice but to start raising and introducing more taxes?
Again, it depends where that oil price sits. Oil at 70. I do see Saudi Arabia running a budget deficit next year. One of the things that we're tracking very close is not just the headline deficit, but the underlying economic performance. So you spend a lot of time talking about the non-oil fiscal deficit, the gap between non-oil revenues and spending, and that gap has widened. It's not surprising. It's widening in Saudi Arabia because they're in the middle of this very spending-intensive phase of their growth story. But it does mean there's an additional exposure to shifts in oil prices. Can taxes push higher. I can see an argument for taxes and pushing higher, but for next year, 2026, I'm not expecting any significant changes.
But more broadly, as we were just reading into you, you're pretty, I would say, cautious about the outlook for growth next year. Where is your skepticism or cautiousness stemming from?
I don't know if it's skepticism or caution, but I'm aware that as cycles mature, they slow. We have had 3 really strong post-COVID years here in the GCC, and I think some of the tailwinds that pushed growth along quite so strongly over the last 3 periods may begin to fade. I can see that in some of the high-frequency data, including here in the UAE. Now, I look at what's the external backdrops and the weakness elsewhere in the global economy. Rates, which are still very high in the US, and that means that rates here are high as well. Strong dollar is a problem for trying to generate strong rates of nominal GDP growth to attract FDI into the region. So, yeah, I think there are some additional headwinds there. But again, I'd stress you need to see those headwinds in the context of a story which still has momentum, a story which I still think outperforms pretty much any other EM or DM that I look at.
To what extent do you think the geopolitics have been weighing on investor sentiment towards the region?
It's really hard to see that in the data. I know that uncertainty always brings hesitancy, and it weighs on big decisions that the policymakers make, that firms make as well. But I look at that underlying data, and I still see investment growth, which has been pretty strong over the course of the last 12 months. The tourism data really strong as well. So I think it's a region which has the buffers and the underlying growth story to withstand that kind of uncertainty.
Of course, you're talking about GCC there, not countries in the Levant or even Egypt. Let me just ask you about Egypt. A tricky situation, ongoing discussions with the IMF. Are they on the right track, would you say, in terms of doing what is required to release the extra tranche out of the IMF bailouts?
It would certainly seem so. My expectation is that that 4th review is passed and the next disbursement does come through. Egypt's passing through a rebalancing story, rebalancing external accounts, rebalancing public finances, starting to re-anchor prices as well. I do expect to see inflation drop quite significantly on a realised basis over the first quarter of next year. The external accounts look at the net foreign asset position significantly stronger than it's been before, but it's a process that takes time. And as you'll see from the growth numbers, it's a process that's quite painful to deliver as well.
Yeah, and Egypt also very much in the eye of the storm in the geopolitics as well, with the exposure to the Red Sea shipping routes. Simon, we'll leave it there. Thank you so much. Always a pleasure to have you on. That was Simon Williams, Chief Economist for Central and Eastern Europe and for the Middle East and Africa at HSBC. Well, coming up, Mali mining dispute. We get the details of the escalating tensions between the military government and miners. Next, this is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Mali's military-controlled government has arrested 4 employees of Barrick Gold as a dispute over local mining operations escalates. Earlier this month, Mali freed 3 Resolute mining executives detained for more than a week amid reports of a $160 million deal. For more, Bloomberg's Andiro Ganga joins us. Andiro, what is going on here? Why is the Mali government cracking down and focusing so much on the mining sector?
Good morning, Jumana. The Malian government is looking to raise revenue domestically, and they say from dividends and taxes they owed up to $1 billion. And this ties back to what you just spoke in the intro, where they arrested 3 Resolute mining employees, including their CEO. The charges were not clear. $160 million was settled on to try and resolve the tax dispute between Resolute and the government, and they were released on grounds that all charges against them be dropped. And now this detainment of Barrick employees just goes to show that there's a serious crackdown in the mining sector in Mali. And, you know, the government is also threatening to take back the permits from Barrick, particularly in the Lulu mining complex. And they say that they reserve the rights not to renew these permits once they expire. And this comes amid growing differences between miners and the government on how to divide the economic benefits that come from mining operations in the country. So these international miners are finding themselves under growing and intensifying pressure in the country because the government is trying to raise revenue, and they're looking to implement a new mining code that is going to change the econometrics of mining in Mali for most of these international miners.
Yeah, so Andir, is this about government reforming the sector, or is this the government sort of forcing these miners to hand over what they think is owed revenue?
Joanna, it depends on what lens you want to look at it from. For context, Mali is a state that has had long-term security challenges. They've had threats from Al-Qaeda and the Islamic State. And also in 2020, they had a coup d'etat. They ousted their democratically elected president and installed a military government. However, they missed an election day that was supposed to restore democracy. As a result, they were blocked from receiving international aid. And they're also locked out of the regional and international market. So the government does not have money, and they're looking to raise money. They're looking internally, and mining is one of the sectors that they're focusing on. They introduced a new code, and under this code, they're looking to raise their stake in mining projects to 35% from 20%, and they're reducing the tenure of mining licenses from 30 years to 10 years. And we can tie this to the tiff that they're having with Barrick. Barrick owns up to 80% of the Lulu mining complex, and the government owns the rest, which is about 20%. And they say that this complex contributed up to 13% of gold production for Barrick in the year 2023. In a rebuttal, Barrick CEO says that that same complex contributed up to $1 billion to the Malian economy, and that is where the crossroad is. These two are not seeing eye to eye on several issues. The government wants $500 million in form of tax disputes. Barrick is offering $371 million. And because gold prices are rallying in the international market, the government wants a larger piece of this pie. Barrick says it's not feasible for economic viability, and the government has rejected this, saying that does not align with Mali's vision. So that's where they find themselves right now.
Wow. Well, a lot to unpack there. Bloomberg's Andir Ganga in Kigali. Thank you so much for bringing us that story. Now for a look at some of the other stories we're following this morning. South Africa is in talks to obtain liquefied natural gas from Qatar as it faces a decline in supplies from neighboring Mozambique in the coming years. The authorities are weighing a commercial agreement that will be led by fuel producer Sasol and state power utility Eskom. Angola's oil regulator and Shell are to sign an agreement today to conduct joint studies on oil exploration opportunities in the country. The National Agency for Petroleum, Gas and Biofuels called Shell's return to Angola an important milestone. Shell was active in the country until the early 2000s. And coming up, German firm Delivery Hero boosts the size of its Middle Eastern unit's initial public offering to as much as $2 billion. We'll discuss the deal, which could be the biggest in the UAE for the year. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Delivery Hero is boosting the size of its Middle Eastern unit's IPO to as much as $2 billion. The move sets the deal up to be the UAE's biggest listing of the year. We haven't even mentioned the company. It's Talabat. Let's bring in Bloomberg's Laura Gardner-Cuesta. Laura, what was it, a week ago, 2 weeks ago, we were talking about the book building process for Talabat, and we spoke about the pricing. It seems to be going really well, so well that they've actually upsized the book.
Exactly. Yeah. And again, it was meant to be the second largest in the UAE. It's now said to be the first largest deal in the UAE so far. They've upsized it, books are oversubscribed. It's likely to price at the top end, so it indicates there's still strong demand in the Middle East. However, there is a bit of caution among some investors that I've spoken to, because very recently we had the example of Lulu Retail's IPO, which was in exactly the same situation, right? They upsized, they were also priced at the top end, but then it didn't really perform well in secondary. So I think we're waiting to see how this trades in December to see, the test of this.
Yeah, and books close on Friday, right?
Books close on Friday, and we'll start trading sometime on 10th of December, I think.
Okay, what are the knock-on implications for the actual parent company here, Delivery Hero?
Yeah, so it's a great question, because the proceeds from this IPO are not actually going to Talabat. Talabat is highly cash generative, very profitable, and they do have expansion plans into different verticals, but they are planning to fund that themselves. So it's Delivery Hero that will be benefiting from this IPO. And some analysts have said they might use this to deleverage their balance sheet because they have a few maturities coming up. They might use this to fund operations elsewhere in other companies in other regions where they operate. So this is good news for Delivery Hero for sure.
Yeah, it's interesting because when we spoke to the CEO of Talabat a couple of weeks ago, one of the questions we put to him was vis-a-vis profitability, because it seems as though, to your point, Talabat as a unit is profitable, but the parent company as a whole is actually not profitable. So this really, from their perspective, is one of their crown jewels.
For sure, exactly. And it's interesting that they're choosing Dubai to list this crown jewel. It's a big test for Dubai as well, a big evolution in the market. But yeah, for Delivery Hero, they essentially came out with a lower valuation initially, right? We discussed this last time.
Yeah.
People were expecting a higher valuation for Talabat, and they came down a little bit, perhaps because of the Lulu retail example, and they didn't really want to push investors too far. But they've seen that they have demand for this, and now they're going to be able to raise more than initially anticipated.
How important do you think it will be for the sector, for the stock actually to perform well post-IPO?
I think this has to go well because we've seen a few, not just Lulu, but we've seen OQEP and Oman also not do so well. So I think it's very important for investor sentiment for this deal to go well.
Laura, great to have you on as ever. Bloomberg's Laura Gardner-Cuesta. Thank you very much. Well, here's a look at U.S. equity futures as we head into the Thanksgiving break. So everything is leaning towards the green. Even European futures, you can see there, up 0.6%. So a bit of a turnaround versus some of the price action we've had as of late. And yeah, that is the pictures we head into the European Open. Coming up in the next hour, we will be joined by Lebanon's Minister for Economy and Trade, Amin Salam. You don't want to miss that interview. This will be the first time we speak to a Lebanese official since that ceasefire was announced yesterday. Don't miss it. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. As the ceasefire between Israel and Hezbollah holds, an Egyptian security team is reportedly traveling to Israel for talks over Gaza. The US FTC launches a broad investigation into Microsoft, looking into everything from cloud computing to AI and cybersecurity. Plus, the Mexican peso strengthens after President-elect Donald Trump says he had a productive conversation with Mexico's President Claudia Sheinbaum. Well, it's just gone 9 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Welcome to the second hour of Horizon's Middle East and Africa. These are your markets for you. Futures leaning towards the green. We saw a bit of a pullback for Wall Street yesterday. Both the S&P and the Nasdaq coming off, well, record highs for the S&P. We spoke about that yesterday. It's 52nd record high for the year. A lot of attention on the data that came out. PCE in line with expectations, albeit slightly stickier on a month-to-month basis than perhaps what the Fed are looking for. We also had GDP numbers also showing the economy still growing at 2.8%, so very, very far away from those recessionary levels. But then the Nasdaq was pulled down by some disappointing numbers out of the likes of Dell and HP, traditional PC makers. So that pulled down the index, in addition to that FTC news that it's investigating Microsoft, weighing on the Nasdaq as well. As for the dollar today, moving sideways, not a whole lot. Yesterday we did dip a little bit throughout the course of the day, and then now Brent, just in the last half an hour or so, we're actually seeing downward pressure emerge here, down 0.3%. All eyes on that OPEC Plus meeting that's coming up this weekend. As for PCE, well, I mentioned this, the month-to-month basis. Take a look at core PCE, 0.3%, in line with estimates. Track it back the last couple of months, and guess what? It's moving in the wrong direction. On an annualized basis, the number for the year is coming in at 2.8%. The headline figure for the year is coming at 2.3%. So still far above that 2% number that the Fed targets. So again, something to bear in mind. All right, let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril, what's going on with these Asian markets today?
Well, it's interesting, right? We've been talking about how Japanese equities have outperformed today, and this is coming against the backdrop of geopolitical tensions kind of in the mix. As Bloomberg sources have said, the US is considering curbs fresh sanctions on sales of chips and related equipment to China. But if you look a bit further in the reporting, it also looks like there are fewer suppliers of Huawei that are going to potentially be targeted. So a bit less severe than previously considered, and the chip makers in Japan are really benefiting from this. Tokyo Electron jumping as much as 10% earlier on in the session. These are the big boosts to the Nikkei. Of course, we are also seeing the yen giving up some of the gains we've seen recently. Note, though, that liquidity is thin ahead of the Thanksgiving holiday, but that seems to be helping the export-related names such as Toyota to kind of recoup some of the losses from a day ago. Jumana.
Avril, thank you so much for the overview. Well, the ceasefire deal between Israel and Hezbollah has largely held in Lebanon for more than 24 hours since it took effect. The truce is seen as a first step towards peace initiatives in the Gaza Strip, where fighting between Israel and Hamas continues.
We discussed the truce agreement in Lebanon between Israel and Lebanon, and we express our hope that this agreement will result in a real ceasefire, and also that its shadow will extend to the Gaza Strip, and that this will lead to reaching an agreement in the Gaza Strip and ending this human suffering as soon as possible.
Well, joining us now is Burcu Ozcelik, a senior research fellow at Royal United Service Institute. Good to have you with us as ever. Let me just start off by asking you the question that I think everyone wants to know the answer to. It's difficult to have visibility, but in your opinion, do you think that this truce is going to hold between Israel and Lebanon's Hezbollah?
Well, that's the big question, and it's incredibly consequential. The issue is over enforcement, the extent to which parties to the agreement have the political will and the military capability, and here I speak more in terms of Lebanese armed forces, to enforce the conditions of the ceasefire, to ensure that it is a lasting one that can contribute to a more sustainable peace settlement going forward. This ceasefire has a more robust enforcement mechanism, one that has the support of the United States, as well as an internationally supported monitoring committee to supervise infractions, violations of the ceasefire agreement, compared to the post-2006 security landscape, where enforcement of the relevant UN Security Council resolutions were ineffective, and we find ourselves where we are today as a result.
Yeah, you mentioned that one key difference, which is the enforcement mechanism that is being introduced. How resolute do you think the U.S. are going to be in the monitoring of what is going on and in terms of policing Hezbollah's activities in the southern part of the country?
Well, this ceasefire deal has an expiration date of 60 days, and that takes us up until when President-elect Trump enters the White House. I don't think that's necessarily coincidental. I think that will have implications for the level of commitment that the United States will continue to give to the ceasefire agreement. I suspect that certain actors on the ground, mainly Hezbollah, as well as its external backer, mainly Iran, of course, will expect that over time there will be a diminishing or waning level of commitment to policing the ceasefire, ensuring that Hezbollah and Israel commit to adhering to its conditions. But it's a 60-day ceasefire plan for now, with hopes that it will extend into a further political settlement, one that includes a more sustainable conditions on the ground in Lebanon and its own governance structure in Lebanon, as well as a reinforced and strengthened armed forces.
Yeah, well, we're speaking to the Lebanon economy minister shortly, so hopefully we'll get some of those answers. Why do you think, from Israel's perspective, it was the right time to sign on to a ceasefire right now? What was pushing them to sign this?
Well, there are mixed reactions in Israel. There is a strong current in the Israeli population and among security and political elites that it was simply too soon, that Israel didn't go far enough. And the ceasefire agreement doesn't go far enough. And in ensuring that Hezbollah's military infrastructure and its capability to hurt Israel is effectively diminished. So there is that current that is resisting the ceasefire agreements. But overall, I think the security establishment's assessment is that the strategic objectives have been sufficiently met. And that means the military degradation of Hezbollah's capacity, the rank and file, as well as the commanding, the high rank and file of the Hezbollah organization has been taken out effectively. But there is still a high level of uncertainty as to the extent to which Hezbollah's military capabilities have been diminished. And the coming days and weeks, I think, will demonstrate the extent to which Hezbollah's abilities to strike inside Israel have actually been diminished. And the level of tolerance that the Israeli side will show in terms of what is an acceptable infraction, what is small enough to sort of not blow up the ceasefire agreement, and what constitutes a major infraction that is deemed to be intolerable from the Israeli point of view.
Yeah, all valid questions. One other characteristic that became very apparent yesterday was the delinking of what is happening in Lebanon with the situation in Gaza. And for so long, now assassinated former Secretary General of Hezbollah, Hassan Nasrallah, used to say that there would be no solution in Lebanon until there's a solution in Gaza. Of course, now there is a ceasefire in Lebanon, but the situation in Gaza is still very much one of a hot war. How would you say the delinking of the two is going to play into dynamics of the next couple of months? How do you see the situation unfolding from here?
I think it's a significant defeat for Hezbollah, for its ideas and ideology. The organization has been long defending, since soon after the 7th of October attacks, that they will fight in solidarity with Hamas in the Gaza Strip, and that no ceasefire will be possible on the Lebanese front in southern Lebanon until there was a ceasefire in effect in Gaza. That has not happened. And so whilst the core of Hezbollah, of what remains, and its supporters in southern Lebanon will continue to try to show this the current situation on the ground as a victory, as having sort of agreed that Israel will now move out of southern Lebanon, I think it was very difficult to justify to the wider so-called axis of resistance actors that span militia in Yemen, of course, the Houthis, Iraq, and Syria. It's difficult to justify Hezbollah's delinking of its own fight and the absence of a ceasefire in Gaza. The effectiveness of the Iranian axis to come to the defense of Hezbollah, I think, will have been noticed by others in the organization and is seen to be a form of defeatism.
Yeah, and on the back of that, do you think there's any chance at all that under a Biden administration, the clock is ticking, obviously, there could be a ceasefire agreement reached in Gaza?
It's difficult to say, but I think it's unlikely for the time being. I think the fact that this ceasefire agreement now between Israel and Lebanon has been agreed, that will go down as a win in the legacy of the Biden administration. Whether it's a major win, of course, is highly questionable, given that, again, there are questions around the enforcement mechanism, the viability, the long-term viability of the ceasefire agreement, and whether it will hold, what kinds of violations will take place. But time will tell. There's a 60-day window now. There's a window of opportunity potentially, but it very much depends on the interests, the incentives of both sides, both in Israel and Lebanon, and certainly, of course, within Hezbollah.
Yeah, very clear. Always a pleasure to have you on. Burcu Ozcelik, a senior research fellow at the Royal United Service Institute, RUSI. Still ahead, we'll be speaking with the Lebanese Economy Minister, Amin Salam, joining us live from Beirut. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Bloomberg has learned that Microsoft is being investigated by the U.S. FTC. We're told the Federal Trade Commission is looking into everything from the company's cloud computing and software licensing businesses to cybersecurity offerings and AI products. Let's get more on our Bloomberg Scoop with John Harney in Washington. John, just run us through exactly what this inquiry is about and how widespread it is for Microsoft.
Well, it's so widespread that the request for information runs to hundreds of pages. So you can imagine the responses if this whole thing proceeds the way the FTC would like it to. This came about for a number of factors, according to my colleagues Josh Sisko, Leah Nyland, and Dina Bass. For one thing, Microsoft is a major government contractor, including with the Defense Department. And the other, what also may have weighed on the minds of the FTC to really to really pursue this is the CrowdStrike failure of earlier this year, in which affected companies and institutions all over the world, everything from airports to doctors' offices, and it made everyone realize just how pervasive the Microsoft Windows system was on which CrowdStrike operated, and how and the vulnerability that resulted from that. The result of everybody using Microsoft.
Yeah, very fair. Well, year to date, Microsoft is up 12.5%. So definitely one of the performers versus the broader indices. We've got to see how this all plays out. Bloomberg's John Harney in Washington. Thank you so much. Well, Donald Trump has nominated retired General Keith Kellogg as his special envoy for Ukraine and Russia. The president-elect choosing a longtime advisor who has supported his aims to end the war swiftly, including by potentially cutting off military aid to Kyiv. Bloomberg's news desk editor Jill Deeses, who's in Hong Kong, joins us for more in this hour. Interesting appointment here. What has General Kellogg said about the war in Ukraine?
Well, so Jumana, what we've got so far from this general, this nominee for the envoy position here is some think tank paperwork that he's written, kind of implying pretty much, a lot of thoughts that are broadly in line with what Donald Trump has already said about the war. Kellogg has said he thinks that, the war needs to end. There needs to be some kind of negotiation between Ukraine and Russia. And it's this idea that he's kind of threatening to, that he thinks that military aid should no longer be supplied to Ukraine unless they're actually negotiating from something of a position of strength in Russia's war in Ukraine. He's also said that he thinks that maybe the front line should be frozen where it is. There should be some kind of a demilitarized zone, and that they need to make some more substantial negotiation efforts towards some kind of a peace deal. I mean, this is pretty broadly in line with what Trump has already said, which is essentially that the war needs to end. So what you're looking at here is a pick that really does kind of fall in line with a lot of what we've already heard from Trump over the course of his presidential campaign. I think the really interesting thing to keep an eye on, though, is obviously President Biden is still in office, and what Biden has done, over the last couple of weeks in particular is kind of, vouch for that continued support so that Ukraine can potentially negotiate for more of a position of strength there.
Right. Well, he's had a busy week. Just a couple of days ago, he put up a post on Truth Social threatening more tariffs. Canada and Mexico in the firing line here. But then he also had a call with the Mexican President Claudia Sheinbaum yesterday. What was discussed? What do we know?
Yeah, so at this point, we've heard from Sheinbaum, who said, that they did discuss the fentanyl crisis. They talked about, some concerns around the border. I mean, that was really what Donald Trump said in that Truth Social post about higher tariffs, was kind of at the center of, these new levies that he wants to introduce on Mexico and Canada, this continued concern about the drug trade, about border security and immigration. So it does seem like that came up as part of this conversation that they had. And then as you're seeing right there, Donald Trump himself just responded after that a few hours ago, saying that he had a wonderful conversation with Mexico's president. What that ultimately means in terms of what those tariffs look like, where they need to be, sort of introduced, I think we'd still have to kind of see. But it does kind of indicate, we're right on track here for a return to some of that whipsaw, kind of behavior and conversation that we had during the first Trump administration. He's willing to jump on calls with these other leaders, maybe kind of hash things out. But at the same time, before, we saw that post from Donald Trump, we also had Mexico's president talking about, potentially introducing some kind of retaliatory tariffs, were these 25% tariffs to be enacted. So again, there's just a lot that's going on here, a lot that's still in the air. We'll have to see, once Donald Trump is inaugurated, if that actually kind of goes forward.
Yeah. Well, taking a look at the Mexican peso, we're now back to where we were at the beginning of the week. So it's been a bit of a whirlwind there. Bloomberg's Jill Desis, thank you very much for the report. Well, Bloomberg has learned that Uber is under investigation by the U.S. Federal Trade Commission over whether it violated consumer protection laws with its subscription service. We understand the FTC is looking at the enrollment and cancellation aspects of the Uber One service, which provides discounts on rides and delivery orders. Uber says it's quick and easy to cancel the service. Coming up, 50% of Saudi Arabia's economic growth came from non-oil sectors. I spoke exclusively to the economy minister. More from that interview next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Saudi Arabia's economy and planning minister expects non-oil activities to increasingly contribute to the kingdom's growth after passing the 50% mark of total real GDP. His Excellency Faisal Alibrahim told me exclusively that the milestone represents a structural shift in the economy.
This budget is a roadmap for long-term economic leadership. We can't transform in one budget cycle or two. This is a long-term journey that requires consistent work. In the past, when we started, we were trying to get our finances and financial management in order, so we focused on zero deficit. After that, we realized that a deficit by design in a stable region between 2% and 3% is good for investing in the right economic sectors that we want to bring forward. This is about quality, non-oil economic growth.
I noticed that spending in 2024 actually came in 7.5% higher than what you had originally anticipated. What guardrails are in place to ensure that spending doesn't overshoot once again in 2025?
We're very conservative in our estimates for revenues, so that helps us. We are also year after year testing with more fiscal rules to help keep our spending within specific ranges. However, there's always opportunities for us to advance progress that we're seeing in non-oil sectors or priority sectors that are seeing more growth than planned. And decisions were made in the past, not just this year, but before, to double down on some of these sectors to improve and amplify the impact, but also to build the foundation for a more sustainable, more vibrant, more diversified economic growth story moving forward.
And on that point about diversification, I thought it was noteworthy that His Excellency, the Finance Minister, Mr. Jadaan, pointed out that 52% of the economy now comes from non-oil sources. To what extent do you think that provides the Saudi Arabian economy with a buffer to what's going on with oil prices? Because there has been quite a lot of downward pressure on the price of oil.
So that's the objective of Vision 2030, minimizing the impact of one commodity price on our ability to grow the economy. Traditionally, our government spend relied on oil revenues, our economy relied on government spend. Both of these relationships today are relying less on each other. So today, for the first time, we passed in 2023 the 50% mark for non-oil activities as a percentage of total real GDP. Today, that reached 52%. We expect this to go higher and higher. It started at 47 before the vision. Even if it's a few percentage points, these represent a structural shift that takes decades sometimes to achieve. So while we're excited about this achievement, we don't see it as a milestone that we'll over celebrate. It's a baseline. It's today's baseline, yesterday's achievement. We want to focus on how the growth can be of higher quality, representing more private sector dynamism, more opportunities for highly valued jobs for people in Saudi Arabia, and more non-oil exports.
Well, that was the Saudi Economy and Planning Minister, His Excellency Faisal Alibrahim, speaking to us. And in about 20 minutes' time, I'm also going to be speaking to the Lebanon Economy Minister. Stay tuned for that interview. A look at equity futures. We are inching towards the green. We're heading into a couple of days of holiday sessions, so very thin liquidity volumes expected. But it is a green sweep across the board. Euro Stoxx futures even up green as well, up 0.6%, despite the pullback yesterday. A lot of focus on what's been happening in France over there. But also coming up on our show, we are going to be discussing results out of Spar. So stay tuned for that interview. Spar licenses independently owned and operated supermarkets, and they have reported full year earnings. We'll be speaking to the CEO shortly. This is Bloomberg. Good morning. This is Horizons Middle East and Africa, our top stories this morning. As the ceasefire between Israel and Hezbollah holds, we speak to the Lebanese economy minister in the next 15 minutes. Chinese stocks fall after a report the Biden administration is weighing additional curbs on sales of semiconductor equipment and AI memory chips to China. Plus, we speak to the CEO of global retailer Spar as it reports full-year earnings. Well, hello again, everybody. It's 9:30 a.m. across the Emirates. I'm Jumana Versace in Dubai. Welcome to Horizons Middle East and Africa as we get to the final stretch of this show. Markets, as you see, leaning towards the green despite the pullback for the majors yesterday. Both the Nasdaq and the S&P ending the session in the red. A bit of jitters came through in the tech space yesterday after the likes of Dell and HP reported weaker than expected earnings. Traditional PC makers, of course, but does tell you about some concerns that are cropping up in that part of the market. But today, brushing some of those concerns off, and of course the focus on the PCE data as well, which came in line with expectations yesterday. USD not doing a whole lot, but ever since the appointment of Scott Bessent at the beginning of the week, we have seen some downward pressure emerging on the greenback. And then all eyes on Brent, sitting just shy of $73 now as we head into that OPEC Plus meeting. Will be a virtual meeting this weekend. The expectation is they may once again delay the decision to put back extra oil barrels to the market. So stay tuned for that one. I also just want to draw your attention to a development in Europe that we're watching very closely as well. And this is the pressure that is starting to emerge on French assets. And here we're taking a look at French bond spreads. This is the yield difference between where French bonds are trading versus their German counterparts. And the spread continues to widen. In fact, we are at the widest spread since 2012. So you have to go really a long time back to get to these levels. Concerns about the trajectory of the deficit and the political backdrop. We're going to be speaking to our correspondent Caroline Cona in just a few moments about what is going on there, but something to bear in mind for the European session. All right, let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril, what is on your agenda today?
Well, we're seeing how Chinese stocks are lower. They are underperforming and reversing some of the gains from earlier in the week. And as we've been discussing, this is amid the specter of US and potentially those fresh curbs on chip sales to China. And even though some have pointed out that it might be less severe than previously considered, it's just a reminder of the geopolitical risk, the tensions between the US and China. And against that backdrop, I thought I'd highlight what we're seeing on the major Chinese ETFs because they are set for record monthly outflows. Certainly a reversal from the prior month, which we saw in terms of equity rebound that was really driven by stimulus. The sentiment has changed quite significantly this past month as investors don't seem as optimistic that Chinese authorities will push through enough fiscal stimulus in order to boost consumer spending. There's also the specter of higher US tariffs. So all in, that is what we're seeing in Chinese stocks today and this month. Jumana.
Yeah, a very good data point, especially if you take that in conjunction with some of the price action in U.S. stock markets, record highs there. Avril Hong in Singapore, thank you. Well, Spar, which licenses independently owned and operated supermarkets, has reported full-year diluted headline EPS missing estimates. The business, now in 48 countries, says that turnover growth slowed in the second quarter due to increased competition and less rapid food price inflation. I'm joined now by the CEO of Spar, Angelo Swartz. Great to have you with us on the program. Let me just pick up on some of the numbers here. Your operating profit came in at 2.9 billion rand. That is 15% up year on year. Revenue, 152 billion, thereabouts rand. But that was lower than expectations. How would you characterize the quarter?
Well, we report in half, so the second half of the year certainly tough. Lots of gains made at an operating profit level, and you'll see that our operating profit up significantly from where it was in H1. But sales a bit tougher than we had expected or than we'd have liked. Our sales performance a bit softer, particularly in our European countries, where inflation has come down rapidly, and a really struggling European consumer impacted those sales in those areas. Switzerland and Ireland, and in particular the southwest of England, where we have a small business. And in South Africa, inflation coming down rapidly, particularly food inflation, and that certainly has impacted our sales trajectory.
Yeah, so apologies, this was for the half year, of course. Let me just ask you about the outlook for the consumer from here. You listed a number of headwinds that have sort of been factored into this half. How do you see the outlook going into next year?
We think the outlook's fairly positive, particularly in SA, where the new government has come in and the GNU has settled quite a bit of positivity around within SA, and SA Inc. really looking positive. Inflation now under control, and the consumer we expect to be in a much better position. Interest rates coming down also certainly is positive for us. The two-pot system and changes to legislation around retirement funding has boosted up our building materials business, and overall I think 2025 is going to be a positive year for SA. In Ireland, we're looking to a confirmation. We've got an election in Ireland this week. We think that's going to be broadly positive for the Irish economy. Confirm the existing government is our expectations. But that being said, we think the Irish economy will continue to grow strongly. The UK, a tougher environment, one with a bit more uncertainty, and in Switzerland, deflation on food might put some pressure on sales, but I think overall the consumer will be in a better position.
Interesting. Thank you for breaking it down by geography. Let me just ask you a specific question to South Africa, because you have a positive outlook there. It's quite competitive. It's a competitive landscape. You've got the likes of Woolworths, you've got ShopRite. How do you see Spar gaining market share, and where do you see yourself gaining market share in that environment?
So in lower income communities, rural and township communities within South Africa, we've had a relatively strong performance over the year, and be happy with where we are there. Certainly pressure on our businesses that cater to the higher income groups, and we think there's a lot we can do to turn that around, and we aim to put out a new concept this year that will hopefully help boost us in that area. Competitive pressure certainly from our competitors, as you mentioned, is ramping up, but we also think that a consumer who is in a slightly easier place, particularly in the middle income groups where interest rates have really bitten, as interest rates come down, I think that will be positive and supportive for growth.
Yeah. And let me ask you a question also, because it's Thanksgiving in the U.S., and even though many people are probably not celebrating Thanksgiving around the world, many retailers are prepping for Black Friday, and this is becoming a phenomenon all over. How big of a deal is it in South Africa, do you think? And how much do you expect it to boost activity in the coming weeks?
Yeah, I think Black Friday is a novel phenomenon in South Africa. It really started kicking off a couple of years ago, probably 4 or 5 years ago. It's now become something that our consumers look forward to, and without I guess without the traditions in the States and waiting for Thanksgiving to kick it off, Black Friday has almost become the whole month of November as retailers compete to get the best offering out there. So we've been out with Black Friday for the last 2 weeks, which I'm sure for American consumers seems odd. But it is very competitive, and we are seeing that the consumers come out and they love the frenzy and the value they get over this period, which is really great.
Yeah. So that positive momentum definitely spurs more buying. Thank you so much, Angelo Swartz, the Spar CEO, talking us through the full financial year earnings there. Now, coming up, a potential government collapse and deepening political crisis puts French bank stocks under pressure. More on this next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. The French National Assembly is set to vote on a proposal by the far left to abandon Emmanuel Macron's pension reform adopted in 2023. It comes as the French government faces a potential no-confidence vote that could oust the Prime Minister, causing uncertainty and fueling investor concerns. So much going on here. Let's get more from Bloomberg's Caroline Conan. Maybe let's just start with what's happening today. Is the vote to repeal the French pension reform that was a very big achievement, a signature achievement of Macron a couple of years ago, but now they're looking to repeal it. Is the vote actually going to pass?
So, it's actually mostly symbolic, but it's very politically heavily charged. Clearly, this was one of the biggest reforms of Macron's second mandate. It had sparked months of protests in the street. Today, this vote might not actually happen because Macron's party has actually put forward 1,000 amendments in order to avoid a vote before midnight. If it does happen, it's possible that the national rally of Marine Le Pen and the left wing will actually join forces to try and repeal this pension reform. So that would be obviously a massive blow for President Macron. Marine Le Pen, of course, is using this because, she's very angry about this budget of Michel Barnier that is trying to pass at the moment. She's warned several times that she's got some red lines on the budget. Here's what she said about this budget a couple of days ago, which started this market panic.
If the budget stays the same, yes, this is not a surprise. We always said it for the past 3 months. I'm telling you, if this budget is not approved, the budget of last year will apply, and actually it's not as bad as this one, as there are less taxes for the working and middle classes.
So Marine Le Pen clearly is threatening the Prime Minister Michel Barnier of a vote of no confidence. One of the ministers from Macron's government actually said, "We are like turkeys waiting for Christmas."
And the other thing that's going on here as well is the Prime Minister, and he hasn't been there that long, Barnier, is also coming under a lot of pressure for trying to get through a budget. How likely is it that he, one, will succeed at passing the budget, but if he doesn't, that the government may collapse once again?
And exactly that's what we've seen in the markets over the past couple of days. You mentioned earlier the risk on French bonds, which has gone to the highest since 2012. And some analysts, including from Citigroup or Carmignac, are saying that the spreads between the French 10-year and the German 10-year could actually rise to 100 basis points if the government collapses. The government, as you mentioned, was only named in September after these snap elections created no majority in parliament. So there is a huge risk. We knew this vote of no confidence is going to happen at some point. Is that going to be next week on the social security budget? Is that going to be the week just before Christmas when we have the deadline on the budget? Clearly, the national rally of Marine Le Pen has become the de facto kingmaker in parliament. And if she doesn't get her way on some of these subjects, on pensions, indexation, on inflation, on electricity prices, clearly she will join forces with the left wing and perhaps make this government collapse before Christmas.
Yeah, and it's certainly being priced into French assets, as we were just showing on the board. Those French spreads continue to widen. Bloomberg's Caroline Conat in Paris, as ever. Thank you very much. Well, coming up, we'll be speaking with the Lebanese Economy Minister, Amin Salam, who is joining us live from Beirut. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersechi in Dubai. A look at some of these stories we're following today. South Africa is in talks to obtain liquefied natural gas from Qatar, LNG, as it faces a decline in supplies from neighboring Mozambique in the coming years. The authorities are weighing a commercial agreement that will be led by fuel producer Sasol and state power utility Eskom. Angola's oil regulator and Shell are to sign an agreement today to conduct joint studies on oil exploration opportunities in the country. The National Agency for Petroleum, Gas and Biofuels called Shell's return to Angola an important milestone. Shell was active in the country until the early 2000s. Mozambique is facing renewed protests called by the country's main opposition leader after he skipped a meeting with the other candidates in last month's disputed presidential election. Roads in the capital Maputo were blocked after Venancio Mondlane urged supporters to begin fresh demonstrations. October's election was the most bitterly disputed since the advent of democracy 30 years ago. And Delivery Hero is boosting the size of its Middle Eastern unit's IPO to as much as $2 billion. The move sets the deal up to be the UAE's biggest listing of the year. Let's bring in Bloomberg's Laura Gardner-Cuesta. Laura, just put this into context for us. A couple of weeks ago, we were talking about how much interest there could be in the Talabat IPO. It seems as though the book building has gone really well so far.
Absolutely. So, like you said, they started book building a few weeks ago, and it seems like the interest for Middle Eastern IPOs is as strong as ever. They managed to upsize by $500 million, essentially, if they price at the top end of the range, which seems likely at this point. Their books are oversubscribed, so yeah, it seems like a strong demand for Talabat's IPO.
Yeah, and how does that compare to the other listings that came to the market in the space? You and I were talking about Lulu, and that actually didn't perform well once it started trading.
Yeah, so I think this is something that's really impacting the book building for Talabat. Like you said, Lulu's IPO was also oversubscribed. They also upsized it, but then it didn't do well in secondary. And I think investors are very conscious about this. Bankers are probably very conscious about this as well. And this is one of the reasons why Talabat's valuation was a bit lower than expected when they came out with it.
Yeah. What is the read across for the parent company of Talabat, Delivery Hero? Obviously not domiciled here, German domiciled. And this, given how well the book building is going, is there going to be a positive knock-on effect to the parent company as well?
Yeah, so I think what's interesting about this as well is that Talabat's valuation is actually just below Delivery Hero's valuation. So it really is the crown jewel for Delivery Hero. They've chosen Dubai to list, like you said, a German company listing its crown jewel in Dubai is a first. It's a very good sign for DFM. But yeah, for sure, the proceeds of the IPO are going to essentially go towards Delivery Hero. So they will do things possibly like delever their balance sheet. They've got some maturities coming up. They will also probably invest in other regions because Talabat Talabat has expansion plans, but they can fund this themselves. So it's good for delivery here.
For the region, you do mention that now it looks as though Talabat IPO is actually going to be the biggest listing of the year. How important is it for just broader sentiment that this IPO does do well when it starts trading?
I think it is very important because Lulu Retail's IPO didn't do that well. OQ Exploration and Productions IPO didn't do that well. And I think going into the end of the year, it's very important for this IPO, for Talabat's listing to perform well in secondary. So,
Laura, thank you so much for breaking it down for us. That was Bloomberg's Laura Gardner-Cuesta. Thank you. Well, renowned economist Noura Roubini is warning that Donald Trump's agenda of tax cuts and tariffs is shaping up as a double-edged sword for the U.S. The CEO of Roubini Macro Associates told us more about the potential impacts of Trump's plans on inflation and growth.
Some of the economic policies of Trump may lead to higher economic growth, being pro-business, keeping tax rates low, deregulating the economy. But unfortunately, many of the other policies are going to have an implication of higher inflation and lower economic growth. The first thing he has already announced is going to be tariff against Mexico, Canada, and China. And that's only the beginning. He has said we might have up to 20% tariff on all our trade partners, up to 60% against China. He wants to have massive deportation of people. In the last few years, the increase in migration has kept the lead on wage growth, has increased the labor supply, has increased economic growth. So definitely mass deportation is stagflationary. He wants not only to make all those tax cuts permanent, but he made other promises. No taxes on tips, on overtime, on Social Security, on income earned abroad, and so on and so on. It's estimated these things may add to the deficit by $8 trillion. Too much demand, inflationary. He might want to weaken the dollar. That's going to be inflationary. He may interfere with the independence of the Fed. Getting out of the Paris Accords is going to make climate change much worse, increase food prices and things of that sort.
It's interesting, Nouriel, a lot of things you just said are what a Bitcoiner would say as to why you should buy Bitcoin. There's now the Bitcoin ETFs. They're over $100 billion, clearly a big hit. There's talk that it could be a strategic reserve. You have gold in the portfolio. Is there anything that could move you to add Bitcoin to your ETF to help accomplish some of these goals?
You know, the Bitcoin is highly volatile. It can go up by 10% one day and down 10, 15% another day. If you want to have a stable store of value, you would not put Bitcoin into your portfolio. The kind of assets we're actually thinking about are all assets that do well when you have lower growth and you have higher inflation, whether it's tips, short-term treasuries. Gold is a hedge against inflation, debasement, de-dollarization, geopolitics, financial crisis. Some exposure to ag commodities that are going to do well in a world of inflation and of climate change, and environmentally sustainable REITs. So it's a diversified portfolio of assets that historically have done well in these types of tail risks. I'm skeptical for a lot of reasons about cryptocurrencies and Bitcoin, because they're not currencies. They're not a unit of account. They're not a scalable means of payment. They're not a stable store of value. And if you want wealth preservation rather than high volatility, you want to stay away from those types of assets.
Always interesting to hear what Noura Roubini has to say. That was Roubini Macro Associates CEO Noura Roubini speaking with Bloomberg intelligence analyst Eric Bolchinas, and also talking through the reasons and the rationale to hold gold, which we know has performed very well over the course of this year. A look at equities before we round up the show, and what we're seeing is a positive handover as we head into the European session. Even European stocks futures are seen opening up 0.6% after a pullback yesterday, and there all the focus is going to be on what's going to happen within France with the pension reform discussion alongside the budget. So keep an eye on that, in addition to some of the developments that we've been talking about in the tech space as well that weighed on the NASDAQ yesterday. But that was it for our show, Horizons Middle East and Africa. If you are a U.S. viewer and still up, happy Thanksgiving. Enjoy the next couple of days, and we'll circle back with you on Monday. For the rest of you, we'll see you here tomorrow. I'm Jemana Versace in Dubai. Stay with us next for Daybreak Europe. This is Bloomberg.